Today we consider what the Great Reset and the infamous WEF forecast, you'll own nothing and be happy, may mean for housing. A contentious issue, this is one for debate, but this is my interpretation, so let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy, so please do consider subscribing. Now, in the face of this crisis and government lockdown policies, central banks globally have engaged in further monetary easing via reducing interest rates and massive quantitative easing programs. Such policies have been further reinforced with credit guarantee schemes allowing mortgages to first-time buyers of up to 95%. Consequently, house prices have reached new highs in many countries, and the intergenerational gap between the haves and the have-nots has widened even further. In fact, as soon as there is any concern about the prospect of house prices falling, emergency measures are implemented to prop up prices. In the UK, we saw the temporary removal of stamp duty, in my eyes the worst of all taxes, used to promote a short-term surge in demand to coincide with the end of the first lockdown. As further lockdowns were rolled out, the policy was extended and mortgage availability was increased. And so when you understand how the Basel rules have been progressively moved to actually favour real estate lending by banks since the late 1980s, it's entirely obvious why we have seen house prices surge over this last 30 years or so. Mortgage debt, bank lending could instead have gone to deflationary purposes, which would have led to fairer outcomes by lending to small and medium-sized businesses. Yet this is clearly not what our central bankers wanted. As asset prices have surged while real inflation-adjusted incomes have stagnated, inequality has grown enormously. Such economic distortions are profound, yet help to support the siren song of socialism for the younger generation. And so any significant market crash would see a massive improvement in terms of affordability for the asset poor. While this may wreak havoc for those with high loan-to-values, this would lead to a new generation of young homeowners, and this does not really fit with the narrative promoted by the World Economic Forum. Now, the alternative is to flood the markets with continued liquidity and let asset prices continue to rise. This will reinforce inequality but serve the interests of the asset rich. Stock markets have headed higher and house prices have risen further, as we know. As Holger points out in this chart, we can see the S&P 500 continues to trade in tandem with global liquidity. And this intuitively makes sense when vested interests are so apparent, as this question posed on the ECB Q&A states. Fed Chair Powell personally owns $42 million in stocks and bonds per US regulatory ethics disclosures, which many believe is a direct conflict of interest. Does the ECB also have ethics disclosures publicly available, showing the executive board members' financial assets? In response, the ECB said the ECB indeed has strict compliance rules which limit the governing council members' ability to hold and trade financial assets and require them to annually publish their financial holdings. And so it seems asset price inflation will persist in the immediate term, and home affordability issues will continue to worsen as asset prices rise. Rising inequity within the housing market, together with soaring national debts, will encourage governments to bring capital gains taxes in line with income taxes, which will impact small-scale property investors, but may also encourage them not to actually sell their properties and simply collect on the rental income. Furthermore, capital gains taxes could be extended to our own residential homes, which would further deter selling of our own properties and reduce labour mobility further. Additionally, a potential lack of mortgage availability may be evident as the fourth industrial revolution and artificial intelligence bites and structural unemployment rises. This may well see more intergenerational cohabitation take place and the young not owning their own home. And so what then will happen to inheritance tax? Well, this will be another very feisty issue to come. Could this be used to collectivise property ownership? I think anything and everything remains a possibility while we have such authoritarian governments. And so the need to address inequality and support the unemployed will be advanced with universal basic incomes and the introduction of communal or even pod living spaces. Potentially such places could be collectivised from former retail or office spaces in urban centres and provided to ensure all have affordable housing. Overall, I expect the nominal real estate prices will continue to rise with liquidity, yet in real terms prices may begin to slide. Indeed, a prime case study for this would seem to be Argentina. As we can see in this chart, prices have risen dramatically in dollar terms per square metre, but with inflation running at such high levels, where the Argentinian peso has lost half its value between the years 2012 and 2015, demand for Argentinian real estate remains very low. And then there is the issue of the monetary reset. In all likelihood, this will further aggravate the affordability issues of housing, while mortgage debts may well be revalued in the new currencies and wages fall. And so what can we do to manage this situation? Well, throughout time, gold and silver have proven excellent inflation hedges, and then there is cryptocurrency, which offers outsized gains due to the exponential adoption effects. I hold Bitcoin, Ethereum and privacy coins like Monero and Pirate Chain. The trends for these assets in the longer term seem clear, as Raoul Pal has made a fabulous point of covering. While mortgage debt is an effective inflation hedge, make sure the rate is fixed and the debt is at least manageable by stress testing at higher interest rates if interest rates do need to rise to combat rampant inflation. I hope this has been a useful exploration in terms of what may happen. There is hope out there, there really is. There's rising numbers of people that are refusing to actually go along with certain decisions that are being made. What's more, there's also the awareness of cryptocurrency, gold and silver, with silver squeeze movements and so on. So people are making the move to protect themselves from the inflation that likely lies ahead and from the potential theft and confiscation we may see from the state. So I hope this has been useful. Thanks ever so much for watching. Do consider subscribing, and I look forward to seeing you next time. Bye bye.